Good morning, traders, and welcome to BCI's morning market analysis. First up, let's talk about the US dollar. The DXY extended its decline for a second straight session, trading around 98.26, a near 2-week low as risk aversion increased amid escalating US and EU tensions. Safe haven flows moved into currencies like the Swiss franc, weighing on the dollar, while expectations for Fed rate cuts pushed out towards June. Upside in the dollar still remains limited. Um, from a technical perspective, bullish momentum continues to fade. The index has broken below the 99 support level, with both RSI and indicators trending lower. Which is pointing to sustained pressure on the US dollar. As long as the dollar remains below the 200-day SMA at 98.71, downside risks still persist, with further weakness possible towards 98.14 and the psychological level of 98. A recovery would require a move highlighting strength and taking the DXY above 99.57. Next up, let's have a look at crude. Crude oil is trading near 59.4 per barrel, stabilizing as Middle East supply risks have eased, following signs that tensions with Iran have cooled down. With immediate military risk reduced, markets now focus towards the US-EU trade tensions, particularly around the Greenland dispute. Which could weigh on future oil demand if tariffs escalate. Technically, oil continues to face strong resistance around the 60 to 60.5 zone. Last week's failed breakout suggests that the rebound was corrective rather than trend changing. Short-term momentum has weakened, with moving averages turning lower. Key support still sits around the 58.3 level, and a break below this area could open the way towards 57.4 and 56.5, while upside remains capped unless prices can reclaim levels above $60. Next up, let's have a look at gold, which surged to a fresh all-time high above 47.66, driven by strong safe haven demand as US-EU trade tensions intensified. The weakening US dollar and renewed concerns around global trade fragmentation have further reinforced gold's appeal as a non-credit asset. Broader geopolitical uncertainty continues to provide a strong fundamental backdrop for precious metals. Technically, the uptrend remains intact despite overbought conditions. Momentum indicators remain bullish, with moving averages rising and MACD strengthening. RSI is still near 73, which should suggest some short-term consolidation risks. Immediate resistance sits near the 4770 and this 4800 psychological level, while pullbacks may find initial support around 4646 and 40 and the psychological level of $4600. Lastly, let's have a look at the local currency, the Australian dollar, which broke firmly above 67 cents, reaching a 2-week high near 67.47, supported by a weaker US dollar and ongoing divergence in monetary policy expectations. The RBA remains one of the few major central banks still discussing potential rate hikes, allowing the Australian dollar to outperform other commodity currencies despite global trade uncertainty. On the daily chart, the Australian dollar is consolidating above the 20-day SMA at 67.02, maintaining a bullish bias. RSI remains above 60, supporting further upside momentum. A sustained move higher keeps 67.66 and the 68-cent psychological level in focus, while a close back below the 20-day average could shift attention back towards the 66.60 to 66.59 level for support. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.